Testing, testing. Hey guys, welcome back. Patrick here. Hey, when you try something new, right, it doesn't always work. I've been talking for like what 5 minutes or something, and it didn't exactly work. So, welcome. I'm Patrick here. So now let's talk about AMD and PayPal earnings. It's not doing very well for PayPal right now, and I see that a lot of us actually have. Hold on. So I have to actually switch this. I'm not really. Close your eyes for a second because you'll see picture in picture. Let's go. All right. So if you look at the community poll that I did earlier, it seems like a lot of us actually have PayPal, and 39%, right, versus AMD is 37%. So let's start with PayPal, especially since right now it's not doing very well, down almost 16% after hours. So what's going on with PayPal? Why are people rejecting these earnings? Well, we're going to look through the earnings presentation very briefly. I'm going to show you like what really stands out to me. But basically, the main thing is that the guidance is just not that good for 2022. The fourth quarter was pretty much in line with what the analysts were expecting. If you look at investing.com, it's pretty good, right? You can see the calendar, and it's a very quick way to see pretty much every like earnings that come up, right? So you can see a nice view of all of them. Just quick tip for you guys. If you look at PayPal Holdings, the expectations for the earnings per share was 112, and they actually got 111. But the big issue here is that look at the forecast for the revenue, 6.9 billion, and they got 6.92 billion. If I recall, when I looked at it earlier, it was about 30 million extra from that. So the company is in line with the expectations for the revenue and the profit for the fourth quarter. But what they're basically saying is that next year, the profitability is going to be flat, right? And when you're a company that is higher PE ratio, like PayPal, that's considered a growth stock, well, you actually need to continue to improve your profitability, right? You can't just be flat for a full year. So let's go over it quickly. Hopefully, like we'll find like things that are encouraging, but don't hold your breath, right? It's not that great. All right. So if you look at this is when you go on their website, you can see two things. You'll see first the statement, and then after that, you can see like the investor presentation. We're not going to go through all of that, but when you have time, go through it. And especially the investor presentation is kind of giving you marketing for what's going to be coming up in the next year, right? They're trying to kind of sell you on the company, especially in a bad quarter like this, where they really have to like talk about the future and what's encouraging about the stock. So don't panic, though. Of course, we always have to wait for like the conference call, which is going to be happening right now. So the CEO is going to answer questions. And sometimes, like with Microsoft and with other companies recently, the stock tends to at least rebound and stabilize, right? So at least until tomorrow or the day after, like don't totally panic. Often the CEO is actually going to reassure people on the call and answer the analyst questions. But let's go through the statement real quick. So the company in the full year of 2021, because this concludes 2021, like the fourth quarters. So we'll talk about both like the fourth quarter, but also the full year 2021. So they actually had 25 trillion in processed payments, which is not bad for the company, right? That is one of the metrics that they're looking for is the total amount of payments that they processed. And next year, they actually expect to reach 1.5 trillion and the revenue to surpass $29 billion. So the company is expected to grow next year once again, right? So the company is still growing low double digits, but it's just the profitability is going to be flat. And I haven't seen exactly yet what the reason for that is going to be. That's what we'll have to decipher. Like, are they going to actually exceed those expectations in 2022 or not? That's going to be a very big deal. So if you go back to the fourth quarter, the EPS GAAP versus non-GAAP, that's a big thing, is 68 cents compared to 132 in the, wait a second. GAAP EPS of 68 cents compared to 132 in Q4 20. So from the year before. And the non-GAAP EPS of 111 compared to 108 in Q4 2020. All right, so as you can see, like the company's profitability is really, really starting to slow down. And that's what scares me about PayPal is that it's a very high quality company, but as you can see, like it's kind of like a primetime player, if you want to do an analogy with sports, but they're kind of like reaching like closer to the end of their career. They're at a period where they're not really like, you still want him on your team, but the performance is starting to really slow down compared to like the newer other growth companies. And if you think about, if you look through your portfolio, you're going to see companies like Enphase that I've been talking about a lot lately, that quarter after quarter, their revenues and their profits are growing. Meanwhile, you have companies that are more like at the twilight of their growth career, like PayPal, that are missing some quarters like this, right? And that's really going to be like the difference between those companies. Like one of them is still growing rapidly quarter over quarter, while one, yeah, it's growing year over year, but there's some quarters where they're not really making a lot of progress, and that's going to really hurt you as a shareholder. All right, so if you look at net revenue, 6.9 billion, that's fine. I mean, that's a good number. And then 1.1 billion in operating income, 68 cents in earnings per share. So the company is still very profitable, right? And they are doing buybacks, which is going to at least help support the stock a little bit. That's one thing that I'm looking for in 2022 is companies that have profits, so that even if the market is really challenging currently, well, if a stock is profitable, right, they're going to be able to support the actual shareholders by either giving dividends or doing share buybacks. Now, if you look at it like in a more aggressive manner, you can say that the downside to that is that the company, that means that they don't have better ways to invest their free cash flow. But on the other side, like as a shareholder, especially right now, the market being the way it is, it kind of gives you a little bit more defense, right? The company is helping you support the share price, especially for PayPal that already dropped by over 50% from its high. We're really going to need it. Right, so for Q4 key operating and financial metrics, well, their net new accounts is one of the areas that the company is really struggling. 2022, everyone was at home, was shopping online, so they were getting new accounts. But now in 2021, that really started to slow down. And we can expect that it's going to be a slow, kind of like a consolidation year for them, right? People are going to still shop online, but you're not going to see the same type of growth as we did in 2020 and then the early part of 2021. So new active accounts down 39%. But the company is still very profitable, right? So total payment up 23%, net revenues 13%, and operating cash flow up 38%. So that's still very good, right? We just have to be careful about the company like actually continuing their growth and continuing to be more profitable than they were before, which, it seems like it's going to be a miss in the short term. So if you look at down there, I wanted us to look mostly at the actual guidance, because that's what's going to really affect the share price. And that's why it's down after hours, in my opinion. You'll see that full year 2022 revenue and earnings guidance, like they expect to process more payments, right? That's very good. And they expect to grow their revenue still 15 to 17%. So that's good. But like, I'm not exactly sure quite yet. Why is it that they don't expect their actual EPS to grow in 2022? Like, what's holding them back? So if you look at the GAAP earnings per diluted share, expected to be in the range of 297 to 315 compared to 352 in 2021, and non-GAAP is expected to be 460 to 475 compared to 460 in full year 2021. So like when we get the conference call and the transcript, and especially like when the CEO answers the questions from the analysts, we might actually get a little bit more insight into that. And that's very important. That's what's going to like really affect the stock in the coming days, because the stock market is looking forward, not backward. Like it's great when the company actually beats like the Q4 earnings, but what you really want to know is how's the company actually going to be doing in the next year. So for now, 148 as of me filming this, right, down $27 and down 15.66%. So that is pretty brutal. Now, someone asked me earlier, and again, my setup is not great right now. I'll be working on it. This is the first time I do a live stream. But someone asked, well, Patrick, at 145, are you a buyer of this stock? And I actually bought some earlier today because I expected the earnings to be much better than this. So at 145, I would potentially consider it. But what I would do is you really need to wait until you hear what the CEO has to say, right? The CEO can come out and say, hey, we're seeing a lot of progress with this. We're being very conservative with numbers, and maybe it's going to be much better in 2022. Like, I'll give you an example. One of the things I noticed with Palantir is that they usually talk about a 22% margin, and then every quarter they report like 29 or 30%, right? So they're being very, very conservative because they rather like undershoot rather than overshoot in their numbers, right? So you want to really pay attention to what the CEO is going to be doing, and that's what's going to dictate whether 145 is a good price or not. I mean, the stock has dropped tremendously. If we pull back the chart, I mean, look at how, like, we're back to 2020 prices. So has the company improved since 2020, or is it where it was before? Like, in my opinion, the company has improved, but look at the massive run it had. I mean, over $300, this stock was clearly like very, very overpriced. Let's look and see what the P ratio was today. So P ratio 42 before the current drop. So this is not a cheap stock, right? And when you have a stock that's at 42 P ratio, even though it's like a really good company like PayPal, well, you need the stock to actually like become even more profitable so that the P ratio shrinks over time. If it's not, then that means that the company is overpriced and it's going to continue to drop. So at this point, I can't really tell you. Eventually, like, it's going to come back, but I expected that there was going to be a short-term rebound, and now it looks like it might not actually rebound like anytime soon. Like, maybe since it's oversold, it's going to rebound. Like, if there's a lot of buyers that come in at 149, but you get my point, right? Like, unless the CEO comes out and says that they're actually like undershooting a little bit, then we might not see a quick rebound. I mean, think about the fact that right now, all of those companies that are reporting are having amazing quarters, and their stock price are going up, while this one is going down very rapidly. So the best we can hope right now is for a Microsoft type situation where people are panic selling, like when they see the press release, and then actually when the CEO comes out and talks, then the stock rebounds. All right, so if we look to AMD, this one is actually doing a lot better after hours. So up $13 and up 11%. And AMD, I expected was going to have a pretty good quarter. So for those of you not familiar, I have 300 shares of AMD. My cost basis is $77.50. And yeah, so I mean, oh, it actually reached $130 now. So the stock had crashed, and now after hours, it's basically like going skyrocketing back to where it was before. So my main thesis on AMD is that everything is related to their data center platforms. I mean, that is where the profit center is for the company, right? Like, if you look at the GPUs and the CPUs, that's great, but that's not where a lot of the profits is going to come from. The fact that the company has really, really made a lot of progress in the data center segment of their business against Intel is where the company is generating like much more profits than they were before. So unlike PayPal right now, you can expect that their profit is going to be increasing, and they have been increasing every quarter for the past year and a half. Right, so if you look at the forecast for EPS and revenue for AMD, so it was 76 cents for the EPS, and they reported 92 cents. And then the revenue was 4.52 billion, and they actually reported 4.83 billion. All right, so they both got a beat on the revenues and the EPS, and the stock is going to be rewarded after hours. Now, once again, we'll have to see what Lisa Su has to say. The main thing for AMD is like, what's their actual roadmap to actually continue to dominate Intel in the server space? All right, so if we look at the numbers here, so 4.8 billion, up 49% year over year. And then the full year revenue is 16.4 billion, up 68%. So this is what I like to look at with AMD is you look at the revenue quarter over quarter, right? So Q3 2021, they were 4.3 billion, and Q4 2021, they're 4.8 billion. Right, so that's up 12% quarter over quarter. And that's what I noticed is that in the past couple of quarters, like they're getting double digit increases in their revenues. Right, so the company is actually doing really, really well. And as we were talking about with PayPal, that PayPal right now is kind of plateauing, while AMD is just putting numbers quarter after quarter, meaning that there's very, very strong demand. Now, I do note here that for their actual earnings per share, that has slowed down a little bit. Like in the third quarter, there was a huge jump in profitability, but it slowed down a little bit in the fourth quarter. Right, so if you look Q3 2021, this is GAAP, right? You can look at non-GAAP or GAAP. So for GAAP, the EPS for the third quarter 2021 was 75 cents, and now in Q4 it's 80 cents, so up 77%. Right, so the company is actually a little bit more profitable, and the big difference is that they are increasing their operating margin. Their margin is actually increasing quarter after quarter because they have a better mix of products. That's what I was telling you guys about, is that now they're actually focusing a lot on the data centers, and that's where the big money is, and those products that they're selling actually have a higher profitability. So their goal was to reach 50%, and they actually reached it now. So that's really, really encouraging for the company. Right, and that's where that's why I'm actually in AMD right now, is that I expect that for at least the next year, they're going to continue to do really well in that segment and continue to generate tremendous profits, right? Basically like Intel used to be in the past. So if we keep going down here, revenue 4.8 billion, we talked about that. The gross margin 50%, an increase of more than 5% year over year, and approximately 2 percentage points quarter over quarter. And all of that is because of a richer product mix. So product mix is what we were talking about. They're talking about like AMD as their CPUs, they have their GPUs, they have the semi-customs, which are like the PlayStation 5s, and then they have basically their data center segment of the business. And like that has changed over the past, right? Back in couple years ago, they were very, very small when it comes to the data center segment, and they were more like trying to compete on the CPUs and GPUs, which have a much lower profit margin for them. So richer product mix means that they're really focusing on that segment of the business that's more profitable now, and that's why they're making so much gains. So if we keep going down here, that's what we talked about earlier. So cash and cash equivalent and short-term investment were 3.6 billion. So the company has a pretty good balance sheet. So cash from operations, 822 million compared to 554 million a year before, and 849 million in the prior quarter. So what I noticed with the company is that now that they're starting to generate more profit quarter after quarter, now they're reaching a phase where they're going to slowly start to provide more benefits to the shareholders in the forms of share buybacks. Right, so for a company like this, again, we don't want them to spend all their money in share buybacks and stuff like that, because you want them to reinvest in the business. But they're reaching a point now where, because they're doing so well with the data centers, like it's like a cash cow, they're going to be able to provide some share buybacks. So quarterly here, if we look at, okay, so we can look at the actual breakdown. So the graphics were 2.6 billion, up 32%. And this is what I'm paying attention to. Enterprise, embedded, and semi-custom revenue was 2.2 billion, up 75% year over year, and 17% quarter over quarter, driven by higher EPYC and semi-custom processor sales. So again, they're supplying the supercomputers and the data centers, and that's where a lot of the profits are coming from. So operating income, 762 million compared to 243 million a year ago, and 542 million in the prior quarter. All right, so that's great. And then let's see their guidance. So for the first quarter of 2022, AMD expects revenue to be approximately 5 billion, so much smaller increase if you notice, right? 4.9 billion to 5 billion, and then 4% quarter over quarter. So they're expecting that it's going to actually slow down in the beginning of 2022. So the guidance is not as great as 2021, basically. So for only year 2022, they expect 21.5 billion. and approximately 31% increase over 2021. So the company is still growing, right, both on the top line and on the bottom line. So that's very good. The only thing I wanted to pay attention to also was usually they have a, see if I can find it. Usually they have a section about the share buybacks that they actually did this quarter. Not sure where they put it this time. Let's see. I know that they started to do it. All right, so let's skip that for a second. So these are the different products that they're working on, right? And the EPIC processors is really what we're paying attention to. This is where they have a big advantage over Intel right now, because the Intel processors, even though they have really improved their what do you call it, like their performance, the thing is that they use so much more power than the AMD chips. So that's why, like, when they calculate the total cost of ownership, AMD still looks very, very good compared to Intel. And that's one of the reasons why they have been making so much progress. So this is kind of like a recap with the like more graphics than what we just looked at. The quarterly revenue is up. Let's see if there's anything important here. Higher operating income. Yeah, so basically they're really making a lot of progress with their servers, and that's what really they're paying attention to. So if you look at the roadmap for the company, they have a lot that they're going to be announcing. They have their new generation that's supposed to be coming in the second half of 2022. So I don't see them actually losing a lot of ground to Intel in the coming year. But I am a little bit concerned that in the, like, if you look more 2023, 2024 is when the company is actually going to start to plateau a little bit. Because if you look at the P ratio for Intel, rather, it's around 10, right? While AMD is a little over 30. So what happens is that as the company like starts to slow down their growth and becomes more of a cash flow play like Intel, well, all of a sudden their P ratio is going to start to shrink, right? Instead of continuing to be above 30. So like that's why right now at 130, I'm starting to feel like the stock is going to be a little bit stretched, right? So if the company actually reaches like 130 to 150 like it did earlier this year, I would personally be tempted to sell right now. Just because of the fact that, you know, eventually the P ratio is going to start to slow down for the company. So this is very, very interesting. This is the breakdown for the different segments of the business, right? So let's see here. Oh, wow. Look at the operating income. Look at the big difference between enterprise. Like this segment of the business is what's really, really driving like that huge increase from 243 in Q4 of 2020 to 762 in operating income in 2021. Right, so an increase of 214% year over year and quarter over quarter 41%. Yeah, I mean, that's pretty much like what our thesis was on AMD, and that's pretty much like what it is that if you believe that they're going to continue to do well with data centers, then AMD is a great pick, and it's going to get continue to get rewarded. And if, like me, you think that it's going to start to slow down, especially in 2023, then you can start to plan your exit basically of the stock, unless you want to just like keep it for a long term, because the company will continue to like grow over time, right? It's just that once we reach that plateau where the company now, if I recall, is worth like $150 billion or something. Let's look. So we are reaching a point now where it is going to start to slow down a little bit. Right, so market cap at 141 billion, and Intel was worth about 200 billion. Right, so AMD is catching up to Intel, and now the bigger they grow, well, obviously, like the less room there is for profit eventually. So it seems like it's slowing down a little bit after hours now at 1244 increase. So that's going to be a pretty good gain tomorrow. As I was saying, just to recap, is that personally, like if the stock reaches 140, 150 again, I'm going to be looking to actually potentially exit the stock, right? Even though I still believe it has a lot of growth in the future, well, that growth is going to start to really slow down. And since I got in at 77.50, I feel like at that time it was really undervalued, while now we're more like at fair market value. And if we recap PayPal, which looks like it hasn't really recovered since then, this one's going to be tricky. This one's going to have pretty much a consolidation year, so it doesn't look like it's going to make a tremendous progress, right? We're not going to be going back to $300 with PayPal or anything. So if you want to be in it for a long haul, then, that's pretty okay. You can probably sell covered calls and all of that, but you're probably not going to be seeing those super quick gains that we were kind of anticipating, right? In the fourth quarter, when we were looking at the stock, it really looked like it was poised to go back to 200 and then 225. But now it seems like it might not actually happen, at least until the next quarter. So I hope you guys enjoyed this little recap for the earnings. It's my first try. I know it's a little clunky, but hopefully I'll improve it in the future. Please let me know what you guys think, and I'll see you guys in the next video. Thank you.